Hey everybody, hope you're having a great Saturday. I'm going to walk us through a portfolio update. Believe the last time I did this was in January of 2019, so it's been 5 or 6 months or so. Had somebody recently in the comment section ask what stocks I have and do I have somewhere of a list. I don't necessarily have a list per se that's very easy to read. It's quite a long list, and I have a bunch of different portfolios and different accounts, I guess you could say. So it's very difficult to just show, 40 odd stocks in a simple list. So this is the simplest as I can get it, or most organized as I can get it. So those of you who haven't been on the channel before, I basically go through every month and talk about how much dividend income I have and also what my goals are. So a quick update. This year, already potentially surpassing my goal. I was trying to get about $8,500 this year in dividends. Looks like it'll be about 8,600, and the year is only halfway over. So hopefully, by the time all the dividends come in, I'll be around the $9,000 range. Next year, a forward income at the moment looks about 9,500 or so, with a goal of 12,000 for the full year of 2020. And this is all coming from $203,000. The total portfolio value at the moment is about $315,000, and I hope I don't confuse you here. That includes my 401k. I can't see the dividends that come out of that. So generally speaking, I just talk about the $200,000 that I can see and track the dividends from. This 401k is just an extra bonus, and I can't really track anything from that. So I mostly just concentrate on 2/3 of the portfolio here, which is what I can track. So what you're seeing on the screen here is looking at everything by sector. So I have sector value, percentage of portfolio income by sector, and then the percentage of income by sector. And that makes it simple, so when I go to the graph on the right, the pie charts on the right, you can kind of get a little bit more ideas what's going on. This is basically just a bunch of lookup tables and sum tables, and it pulls onto my first tab, which is basically all the individual stocks I have by portfolio and whatnot. This basically always shows the fact that the largest things that I own, if I just scroll over to the right, makes it maybe a little bit easier. But most of the things that I own by weight percentage and by income is energy. So it's about 30% of the total weight of the portfolio, 35% of the total income from the portfolio. And generally speaking, it comes out financials, real estate is generally the biggest. And then after that, consumer staples generally shows up in terms of weight and income. I've started to get a little bit better in these smaller portions here with respect to, say, telecommunication services. That's generally gotten a little bit bigger. And also materials is getting a little bit bigger. It used to be that I only owned BHP for natural resources and materials, but now that has kind of come back up to fruition. This information technology is actually a decent chunk of the portfolio. It's about 6%, but it's only 0.4% of the actual income from the portfolio. Those are stocks like Google, First Solar, and a couple other information technology stocks that don't actually end up paying anything in terms of dividends yet, fingers crossed. And that's basically it. I have some industrials and some healthcare, but healthcare is, generally speaking, probably one of the sectors I've missed out on in the past couple of years, which probably would have been more beneficial. But hey, it is what it is. And then actually scrolling down, very far down, this is all the individual positions I own. And so sometimes I own positions in multiple accounts, so this doesn't necessarily have absolutely everything in terms of combined. So you might see Philip Morris twice, you might see AbbVie twice. So unfortunately, it doesn't really help out too much, and that might be something I work on in the future, is to try to simplify it so that way if I own a stock in multiple accounts, it doesn't show up a bunch of different times. So this table generally has a lot of different things on there. A lot of it is connected to other shares, or I'm sorry, other cells, and so it calculates automatically. I've simplified it down just for the ease of viewing to the ticker symbol, the company name, how many shares I currently own, the current value, and the return, and also the forward income and the sector. The sector is what I use in the VLOOKUP tables on the tab that I just showed you there. So looking currently, I have about 12 shares of AbbVie, 6 shares of BlackRock that I just purchased, Bryn Mawr Trust, which is a regional bank in Pennsylvania that I've seen in the past, and it's recently been doing pretty good in terms of share price appreciation, dividend income, and opening up new branches. And recently purchased 89 shares of that. Bank in Nova Scotia, Canadian bank, about, I don't know, I think it's like 100 years or so dividend payments, so I figured I'd have some of that. BP Midstream, Cannabis Wheaton, which was my my cannabis play, which hasn't really worked out. I'm about 50-60% down on that. Chesapeake, purchased at the wrong time back in 2014, 2015, so that's a pretty poor choice as well. Cheniere Energy Partners is my LNG play. A couple shares of Google. Icon Enterprises, which is a conglomerate of different companies. Johnson & Johnson, which is a recent purchase, 25 shares. I've bought and sold Johnson & Johnson a bunch of times in the past. Most recently, I believe, was about a year or so back. It dipped down below 100. Purchased a couple shares, and then it jumped back up to the 120, 130 range, and so I sold for a quick couple $100 profit. Kinder Morgan, which I held since it was Kinder Morgan, the MLP, and down a little bit because of that, but the dividends are going back up, so I'm assuming I'm going to be in the green there pretty quickly. Cosmos Energy is a high risk, high reward independent energy company. Not really going to talk about that too much. Main Street Capital is a Houston business development company. 135 shares of that. Recently bought 31 shares of 3M Corp, which is an industrial. That was because it dipped into the 150s, and so I bought a couple shares of the 150s, and it's back up to the 170s now, which is good. Good enough for about almost $200 in income a year, so almost about $50 a quarter. Excited about that. Hopefully it continues to raise its dividend like it has in the past. Altria Group, about 20 odd shares of that, purchased, I believe, in the high 40s. I'm sorry. So just bought it because it's a really good dividend company in the past, and it continues to buy and innovate the company, whether it's investing in e-cigarettes or what have you. Realty Income Corp, I'm sure you guys know, I buy and sell Realty Income Corp as much as I can. I generally don't like to sell companies, but Realty Income Corp recently jumped up into like the $70 or so range, and I had bought it back in like the mid 50s, and so I had about 200 shares at one point, sold it, and repurchased some shares when it dipped back into the mid 60s or so. As you can see, I'm up about 17% on the 19 or 20 shares that I do have. PepsiCo, bought some when it dipped back into the hundreds, and I'm up pretty good on that, almost 40%. Phillips 66, purchased a couple years back now. This was back when $150 in dividend income was pretty good. So anyway, now it's kind of lagging behind. It was up in the close to the $100 range, and it's kind of come back down. Royal Dutch Shell, I have two different share types because it used to pay out in A shares, but if you bought B shares or what have you, but sitting on a pretty decent gain associated with those, close to about $450 in dividends a year from that. 100 shares or $100 a quarter or so. Cedral Partners is another, high risk, high reward play. Bought it at $9 back when it was dropping like a rock, 2014, 2015. Not really too upset because it's only like a, $1,000 that I invested or what have you. So maybe it'll go back up and not necessarily have to worry about anything, and it'll end up paying $1 per share again or what have you, and what have you. Square is something that I bought and did really well on. As you can see, the return is about 230% or so. I forget how many shares I bought. I think I bought like 107 shares, I think, which is why the 7 is left over here. And it ran up into from the 20s. I think I bought at 22 and I sold in the 70s. And I'm holding on to these 7 shares because I think basically for what I paid originally for the Square shares is close to, no, that's a lie. I don't want to, no, that's not true. I'm doing math in my head right now, and that's not true. So anyway, regardless, it's up 230%. It's doing pretty good. Stag Industrial is a really, really good story. About 100 shares back in 2014, 2015. 80% return on that, $175 per year. Pays monthly. Put about $2,000 back in the day, and it has grown to almost $4,000, which is one of my better plays here. Starwood Property Trust. Oh, and this isn't automatically reinvesting anymore. I took it off. Maybe I'll start reinvesting again, but I'm sure I've made over 100% based off of the dividends from that. Starwood Property Trust started with $1,000. It's grown to over $1,500. AT&T continue to accumulate shares here, over $100 per quarter from AT&T. Verizon, very similar story, $250 coming in every single year, 106 shares at the moment. Wells Fargo, also getting a pretty decent chunk of change here, almost good for 2 shares per quarter when I get about $100 per quarter. Good enough to repurchase 2 shares if I reinvest. 217 shares of that. Crazy to think that I'm in the couple hundreds of shares now with everyday companies like Wells Fargo, AT&T, but that's just how the portfolio has grown over the past. Have a small account where I invest the money that I get from YouTube. So I'm up to about $1,700 or so in the YouTube Moolah account. Should get another couple $100. Shouldn't say a couple hundred, about $100 or so this upcoming month because I didn't get paid any last month. So hopefully get that. 4 shares of IJR, which is a small cap ETF, ITOT, Total Stock Market Fund, and S&P 500. I have 4 shares. And that's good for $37 a year, which is pretty cool. I just got a dividend payment from all 3 of these the other day, and looks pretty good, which is pretty cool because $37 from reoccurring income from you guys is visiting the channel is pretty cool. Going to the Roth IRA account, so this is pretty cool. BHP. I used to own over 200 shares of BHP, and I regret selling the 100 or so shares because now the return is about 178%. So really good story. Continued to purchase as the price was going down. Realized that BHP was one of the best natural resources companies in the world. And if it were going down in 2014-2015 timeframe, then there was hell to pay because I think it was Vail or BHP that were up in the running for really good natural resource companies, and BHP took the cake and made a investment and turned out for the best. CyrusOne is my how do I put this? Data storage real estate investment trust play. Decent return on this, and hoping that the dividend would continue to grow at an exponential rate like it was when it first IPO'd. It's since slowed down, but still for $138 a year, not too horrible. I have 50 shares of Disney, almost 51 shares of Disney, good enough for almost $90 a year. First Solar, which is an information technology solar company, currently pays no dividend, but up about 75%. I used to have 200 shares. I sold off a portion of them, I believe, for a little bit of profit. So anyway. Some more Icon Enterprises, some more Main Street Capital, 150 shares in my Roth IRA. Good for almost $450 a year, which is good. Continue to reinvest those dividends back into the company. Started with 150 a couple months ago, a month or so ago, and I think I get about 0.7 shares every month, which will be good because it pays about 20 cents per month, so about $240 or so a year. So it ends up giving me every month an increase of pay about $2 or so. Philip Morris, I have about 65 shares of that. Good for almost $300 a year. South 32 is a spinoff from BHP. Some other Verizon shares that I used to have in a computer shares account, but I transferred to my Roth IRA. WP Carey, also a pretty good investment, up about 59-60% on that. Another $308. So from, sorry about that. I was thinking for some reason that this WP Carey is my Verizon. I got really excited. I was going to say, how much money am I making from Verizon? Damn. Anyway, good for $308 from WP Carey. Really cool real estate investment trust, international. So it has things in the U.S. and Europe. So if you don't want to just play U.S. Real estate investment trust and you want some more international exposure, WP Carey is your play. It's recently run up in price though, but my yield on cost is really good. So I just be cautious. I don't remember what the forward funds from operations are, so before you make an investment, just double check. And I guess before jumping up to the computer shares account, I'll do a quick rundown of what the actual accounts pay out. So my individual brokerage account pays about $5,300 or so every year at the moment, forward income. $37 for my YouTube Moolah account, and about $1,800 for my Roth IRA. That is just where we're at. And then going to the computer shares account, that almost pays $560 a year. This is companies like AbbVie, Altria Group again, Aqua America. I wish I'd bought more of this, so I guess a quick story about this. So computer shares allows you to purchase companies monthly through your, bank account. So what you could say is I want to invest $50 a month for however many months, and it takes it directly out of your account. So you can set it up to whenever you get paid, pull $50 out, invest into this company. That's what I did with the Aqua America because they didn't charge anything to do so. And so I purchased about 20 shares relatively quickly, and it's kind of been holding on to them for a while, just getting the dividends and reinvesting them and what have you. It's a company I wish I stuck with, though, because it's up 82%. So just a quick story on that one. So ExxonMobil purchases for the dividend income, about 7% return, $250 a year or so, continue to reinvest the dividends. Not sure if I'm going to sell this one or not. I do like Exxon, but the energy portion of my portfolio is a little high, so not 100% sure on this one. But for now, definitely going to keep it because it's good for about, I don't know, what is that, $60 or so a quarter, so good enough for me. IBM, 5 shares of that. Keurig, Dr. Pepper. One thing I never talked about is last year when these companies merged, I had about 6 or 7 shares of Keurig, Dr. Pepper or so. And with that, when they did the merger, they paid about $100 or so per share for every share of Dr. Pepper that you owned. And I never talked about it, but I got about $750 or so. With after taxes, about $700. So I got a $700 check from that. And I really always wanted to make a video about it, and I don't know if I ever did, but it was a really cool story, and I think maybe that's something I should talk about because a lot of times on this channel I talk about dividend income and never about mergers and acquisitions and what can sometimes happen from that. And that was the first time that had happened to me, and so I ended up with a $700 check in the mail and was super confused. And what ended up happening was they merged, and for some reason, generally I'm pretty up to date on all my my topics and my stocks and what's going on with them. But for some reason, probably because I own so many stocks, and Dr. Pepper was such a small portion of my portfolio, it's like less than $1,000 at that time. I saw that like my share price had like dropped by like 80%, and I was like, "What the hell is going on?" And next thing you know, I was checking my computer shares account. It said check sent to you for $700 some, and I had no idea what was going on. I looked it online, and I was like, "Oh, merger, acquisition, what have you." And so that was a cool story, and I've never talked to you guys about it, and I apologize because I thought others on the community would love to hear about it, but I just never got around to it. So maybe I'll eventually come back and and do it. Philip Morris, again, another 21 shares or so, good for $100 a year, $25 a quarter. Some more Realty Income Corp. This came from a transfer from another account that I held with Wells Fargo. They shut it down or transferred, and so I have a couple shares with that. Some Clorox, Wish, another company that I wish I continued to purchase through computer shares. Ended up with about a 100% return. Anyway, it is what it is. Waste Management bought. That's something I always talked about with my friend. Purchasing Waste Management, I was like, hey man, greatest company name of all time. Tells you exactly what they do. They got a great business model. They know what they're doing. Trying to sustain the waste landfill portion of the earth. I'm like, always gonna be people generating trash. Great business model, right? And should have listened to myself because I think when I first started looking at it, it was trading for around $30 a share. I think I was purchasing in the high 40s, and I was like, oh man, I'm overpaying for this. It used to be in the 30s. Now it's $111 so per share. So missing myself out, and relatively weak dividend pair, but still good enough for $12 per year. Shareholder services, this is a small section of the portfolio. I have no idea what my cost basis is for my Procter & Gamble because it was transferred from a different company. So ignore this 400% return here. But McCormick & Company have, another $50 that I invested in that. General Mills invested $100 or so in that. And that's basically it. I mean, it's $20 for that entire account. Not too much. Then I have some Fundrise, Cardone Capital. Fundrise haven't really gotten too much of a return on that, 7% or so per year. I just checked. Good enough for about $45 or so in dividends a year. I invested $1,000 back in July of 2017, up to about $1,150, so 14% or so. Nothing too extravagant here. Cardone Capital still waiting for, been about a month or so, waiting for the final paperwork to be signed, but they have received my funds. Waiting for the payments and the signature to start, so that way I can continue to get my income from that. Until then, I'll just make sure to keep you guys posted that on a monthly basis, whether or not that's included in my dividend income or not. If it does come through and it is 6%, it should be good for about $900 a year, which is pretty good, $75 a month or so. So if it doesn't start showing up 2018, it's still 2019. That'll be good because that's good for almost $1,000 for the entire year. And then I have my nest egg, which I recently drained, which I should start building back up here pretty recently. But that's relatively it in terms of where we're at. This is kind of cool. I like showing this graph a lot, which is basically the income by year that I have. Another graph that I want to make, which I never did and I've seen somebody else do, is their net worth by month. And that's something that I wish I had done, but I never have done. And I should do that because it's a really cool graph. But it is what it is. Hopefully one day when I get really bored, I'll go through all my videos and see if I can piecemeal it together or so. This is talking about 2019 income. I have my goals on here. So $12,000 for next year and $8,500 for this year. And this does not include YouTube income for the goals, by the way. So you want this green bar to be greater than what the goal is. So current income for next year is looking about $9,500 or so. I'm hoping to get it to about $12,000. Like I said, forward income for this year, 2019, is looking above that $8,500 mark. Whether or not I actually get there, if there's any severe dividend cuts or anything like that, not forecasting any, but the world is unknown and who knows what might happen. And this also could include, dividend increases in the third and fourth quarter, which I generally try to include every time I hear a dividend increase. I incorporate that into my forward annual income, but maybe somebody hasn't announced them yet. So the fourth quarter could be full of dividend announcements, and this number could go up 7-8% based off of dividend growth in the past that I've seen, in the year. So relatively cool. Really excited about the portfolio thus far. Like I said, it's over $300,000 at this point, and really happy the way that the $200,000 portion that I track, the IRA, the IBA, a couple of the computer shares account and other real estate accounts that I have are coming together. Really curious what your guys' thoughts are. I know that's a lot to throw at you. It's a lot of different ways to look at it. I hope I didn't lose you across the way, but really tried to break it down relatively quickly and simply here. Another thing I never mentioned to you guys, which I thought was kind of cool. I averaged all my portfolio at the moment, and I'm currently looking at a 4.6% dividend yield. It's kind of high in my opinion. I want to get it down to about 4% or so, but I think investing in some of these recent depreciating stocks like 3M, BPMP, stuff, and Main Street Capital brought this up a couple points here, 0.2, 0.3%. But another cool thing to look at is yield on cost, almost 6% for the portfolio, which is awesome. That means I either purchased the stocks really cheap and the dividends have continued to increase, or it's basically all that could really have happened. But almost 6%. So just from dividend income, not with any capital appreciation, in the next couple of years, I should be expecting 6% return just from that. And I hope to get this to 10% or so in the next year or two as dividends continue to increase. But if you think about it, 10% in a couple of years yield on cost, that means I'm averaging about 10% of the money I invested a couple of years ago. But that's pretty cool. Another problem, the one problem I see with yield on cost is just because something is yielding 10% on the money that you invested, say 5-10 years ago, doesn't necessarily mean it's the current best investment, right? Just because you're making 10% on, let's say, $1,000 that you invested, so you're making $100 per year off of your initial investment, doesn't necessarily mean that that investment is still perfect. There might be another company out there that yields something like 3 to 4%, and the company that you're currently investing in, or let's put it in an example for this. Even though I'm yielding something like 5.8% right now on the companies I have invested in, there might be a company that is currently paying a 5% dividend yield that is better than the company that I have, let's say on average, paying 4.6%. So just because this yield on cost is 5.8%, it might cloud your judgment when in actuality, that 5% yielding company is probably a better deal. So it's kind of a catch-22 sort of metric, right? I mean, it's really cool to see what your past investments are now yielding in terms of income, but it's also a metric which I feel like blinds people because I hear people talk about 13, 14% yield on cost, so why would I sell it? But in actuality, it's like, well, the stock at the moment is only yielding 2.5%. You could buy that company, it's yielding 3.5%, and it's probably a better deal. That seems like it's kind of run up in price, right? So, and I talk a lot about that with people like Johnson & Johnson. Not saying Johnson & Johnson's a bad company. As you guys see, I own Johnson & Johnson. But in terms of starting yield, I think it's in like the mid-2s or something like that. You could have recently bought 3M, and it's in like the mid 3.5, almost 4% range or something along those lines. So you're getting an entire 1 percentage point higher in dividend income comparatively to what you were. And the only reason why you might not buy it is because of your current yield on cost. I can understand if you think Johnson & Johnson's a better company and you think the dividend increases from Johnson & Johnson will outweigh 3M in the future, but I think that a lot of people look at yield on cost and use it as the holy grail of metrics, and I don't necessarily think that that's the right thing to do. So sorry, get off my soapbox here and end the video, but I really appreciate you guys stopping by. Really hope you guys have some really cool questions. What do you think I'm invested in that's a good deal, bad deal, you wouldn't have purchased, you are inspired by, you want to purchase now because of that or acquire more shares? But I'd like to say that I'm not a financial advisor, and so take everything that I say with a grain of salt and consult a professional before you make any sort of investment choices. But I really inspired and really excited about the portfolio thus far and continuing to grow it. Part of me is disappointed that I'm not in the $500,000 range yet, but at the same time, pretty cool to see over $300,000 in the portfolio since starting in pretty seriously in about 2013 time frame, so about 6 years or so. Other than that, just like, subscribe, and I'll see you guys next time. Have a good night.